The Federal Reserve Bank just put out a concerning statement about our economy. The Atlanta Fed just said that the United States economy is not expected to grow in the first quarter of 2025. It's not expected to stay the same. They are expecting our economy to shrink in the first quarter of 2025. This would be the first quarterly contraction for the United States economy since the first quarter of 2022. Now, if you remember what happened in 2022, we saw 2 quarters of economic shrinking. That is the technical definition of a recession, but we weren't declared to be a recession in 2022. And we also saw the stock market fall by around 20% in 2022. That's why in this video, I want to go over what's going on with the economy and what the Federal Reserve Bank said. That way you don't get misled by the headlines. And if you want to read the statement by the Federal Reserve Bank, I have that for you down in the description as well. Now, the first thing that I want to make sure is extremely clear is we have very little information. The Federal Reserve Bank put out essentially 2 sentences saying that we believe that the economy is going to shrink in the first quarter of 2025, and then they link to their chart showing that they believe that the economy is going to be shrinking in 2025. They didn't give any hard reasons, but we have a lot of people giving opinions. We have a lot of people giving their thoughts here. But I want to look at the hard facts, and then I want to talk about the opinions. Starting with the hard facts. One reason why people are talking about the economy shrinking is because imports have soared in the first quarter of 2025. This is what MarketWatch said. Imports have soared as businesses moved to get ahead of higher costs from proposed tariffs from the Trump administration. This increase in imports subtracts from GDP growth. What that means is we have a lot of businesses saying, we might see tariffs on Canada, Mexico, China. So let's get our stuff now before the tariffs happen. Let's buy a lot of stuff now before these tariffs happen. That way we don't have to worry about paying those tariffs in April, May, or June or beyond. And so it looks like a lot of businesses were importing stuff into the United States in the first quarter of 2025 as a proactive measure being worried about tariffs. Well, those imports are a negative measure on our GDP because it shows that we are importing more stuff. So that could be one reason why our economy is shrinking. Not because we're in a recession per se, but because people are buying more stuff from foreign countries. That's what MarketWatch is saying. The second part to this is people being worried because there's a lot of changes happening in our economy. We have changes with tariffs. We have changes with Doge. We have changes with artificial intelligence. We have changes with reciprocal tariffs. We have changes with cryptocurrency, and we would have changes with BRICS. I've made videos about pretty much every single one of these topics, but all of these concerns have people worried about the economy and, of course, the stock market, because we have been seeing a ton of volatility in the stock market, and we've been seeing a ton of volatility in cryptocurrency. And this is where I want to remind you for 1 second that while a lot of this volatility creates panic and fear, it also creates opportunity. And this is why on March 11th, I'm hosting my free workshop where I'm going over all the changes that we're seeing happen in our economy right now, from tariffs to Doge to AI, and how these things create an investment opportunity for you. It's a free workshop. I'm doing 2 sessions on March 11th, once in the morning at 10:30 a.m. Eastern Standard Time, and again in the evening at 8 p.m. Eastern Standard Time. It's completely free, so if you'd like to join, I have the link for you down in the description. Just make sure you join soon if you're interested, because we have a limited number of people that can actually join live, and we have many thousands of people that have already registered. So talking about the concerns, there's been a lot of changes happening. Obviously, there's been a lot of news lately about tariffs that has been hurting the stock market because companies are concerned that these tariffs will hurt trade, it will hurt business. And then there's the uncertainty aspect, which is, okay, if we do implement these tariffs, what will countries do to us? Because there's been a lot of talk of reciprocal tariffs by Canada, maybe by Mexico, maybe by other countries like China. What is the impact of that going to be if we are selling our products there? And then there's also the talk of tariffs on European countries. How is that going to impact our economy? Not to mention that these tariffs could also have an impact on inflation. So there's a lot of uncertainty, and the stock market hates uncertainty. In addition to that, we have a lot of changes happening in our government, from cultural shifts to actual department changes. Doge has been laying people off, they've been cutting departments, and they've been making a lot of changes. Now, the thing that I want you to remember here is every dollar spent is a dollar of income for somebody else. And I made a video about a week ago talking about this. The largest spender in our economy is not Amazon or Jeff Bezos or Apple, it's the United States government. And the government has been spending money through our tax dollars and debt. Well, that's good on one hand because it's been stimulating the economy. Every time the government spends money, somebody's getting paid. If they're paying for construction workers, if they're paying for military, if they're paying for whatever, somebody's getting paid. And that somebody then has money to buy a house, to buy a car, to do other things in the economy. Well, the downfall is the government has been spending a lot of money that they don't have because the government has been going deeper and deeper into debt. We have $36 trillion of national debt, actually more than that. And we spent about $2 trillion more than what we generated in taxes in 2024. So we're spending a lot of money that we don't have. This is called deficit spending. And this is good in the economy because it boosts the economy, but it creates a problem, and that problem is inflation. And this is why I always say the most expensive kind of money is free money. Because the person who pays the price is the person that does not understand how inflation works. The person that pays the price is the person that doesn't understand how to invest their money. The person that pays the price is the person that is not financially educated. And unfortunately, that's the majority of people. So here we have the situation where we're seeing a lot of changes happen in the government. We're seeing a lot of changes happen in the private sector. And all these changes are creating uncertainty. And like I said a few minutes ago, the stock market hates uncertainty because people, investors, are dumping their money into the stock market with the goal of growing their money. Well, when you are uncertain as to what's going to happen to the economy with tariffs, when you're uncertain about inflation, when you're uncertain about how the economy is going to move, well, you might not want to put your money in the stock market because you'll say, I want something a little bit safer. I want something that's a little bit more secure because I don't know if people are going to be able to afford Amazon in a few months. I don't know if people are going to be able to afford the groceries as easily in a few months. And so we've been seeing people now look for safer alternatives. You might have seen gold prices, they've been booming. And this has been creating a lot of uncertainty. Now, the stock market and the economy are two different things, but they are similar. And just because you see a stock market downturn doesn't necessarily mean you're going to see a recession, but they do often go hand in hand. When you see the economy go down, you generally see the stock market go down. Now, we do see periods where they move in opposite directions. I mean, in 2020, we were in a recession, supposedly the worst recession since the Great Depression, yet the stock market was breaking a new record high by the end of 2020. So yes, the stock market and the economy don't always have to move in the same direction, but in general, over the long term, you do see them move a little bit more linearly. But all these concerns have created a little bit more fear, and you're starting to see that in the markets as well. But you're also seeing it in cryptocurrency. Now, cryptocurrency is interesting because, of course, Bitcoin was booming in the early parts of 2025 because everybody was excited on this idea that Trump is going to make the United States the crypto capital of the world. And over the last few weeks, we saw crypto prices fall. Now, a lot of people panicked about crypto prices going from $100,000 a coin to below $80,000 a coin. But I want to remind you that 6 months ago, Bitcoin was at $60,000 a coin. And cryptocurrency is extremely, extremely speculative. And that's what you have to remember if you're investing in speculative assets, that they move up and down very fast. It can crash just as fast as it booms. And so over the weekend, Trump put out a message saying that now he wants to create a strategic cryptocurrency reserve. And he named off a few cryptocurrencies like XRP and Solana. And after that, we saw crypto prices boom again. And that gave people a lot of relief. And then crypto prices started to fall back down to earth again. So you can start to see that there is some concerning sentiment out there. But sentiment can change like that. People can get excited tomorrow. People can get freaked out the next day. That's the downfall of liquid assets. Liquid assets like stocks and cryptocurrency, things that you can sell very easily. If you are going to be an investor, you have to remember to stay calm because the reality is people love to sell emotion. And there's a lot of changes happening in the economy. And if your goal is to be an investor, you don't need to worry about what's happening in the day-to-day. You need to worry about the long term. People freak out all the time. People freak out and then they show it in the stock market. Well, your goal is not to freak out. It is to find the opportunity. And when people are selling, well, that can create a good buying opportunity. But the goal is to be a long-term investor, and it's very difficult when everybody's selling. It's very difficult when you go through long periods in the red, and we haven't seen a long period of downturn in a very long time. I mean, 2022 was a little bit of a downturn. I mean, we saw the year of the stock market being down, but it wasn't horrible. We saw such a huge run up in 2020 and 2021 that it didn't feel like that bad. 2020 wasn't really a downturn because the markets went down, and then we saw the fastest rally in the stock market in the history of time. So the last time we really saw a true painful downturn was after the 2008 recession. So it's been a while. Now, I'm not saying we're going to see a downturn tomorrow, but you got to remember, recessions are a part of our economy. You got to be prepared for them. And a lot of people are freaking out when we see these small moves in the market, but that's a part of the market. And I want you to be educated and aware that we don't freak out, because one of the most basic concepts of investing in the market is to stay calm. And if you can stay calm, well, then you're not going to be enticed to buy something that you shouldn't, and you're not going to be enticed to sell something you shouldn't. See, it's the greed and fear. Those are the two emotions that not only drive markets, but they also are what drive media. Media loves selling you greed, they love selling you fear. They want to tell you that you're going to get rich if you buy this thing, or if you don't do this, you're going to lose all of your money, because that's what drives clicks. I'm telling you this because I have a media company. I've seen it. And that's one of the reasons why I push Market Brief so hard, because all of our content is inside of one email, is inside of one newsletter. So we don't have to have the same sensationalism, but this is where you got to understand the game. You got to understand how investing works. The best investors are the ones that don't get caught up in the emotion. They understand what's happening, and then they find the opportunity. That's what Wall Street is looking to do. And yes, we have some concerns about the economy shrinking, but we don't know exactly what's going to happen yet. Of course, you want to be prepared for recession, but we don't know when the next recession is going to happen. You want to be prepared so when it happens, not if, but when it happens, you can capitalize on that opportunity. Again, I'll be keeping you posted here on my channel. I'll be keeping you posted on Market Briefs, and on a workshop on March 11th, I'll be talking about how you can capitalize on the investment opportunities that we're seeing happen around us right now. And with that, I will see you on YouTube tomorrow.